Hey traders, happy Friday. Welcome to Charts and Coffee for June 25. So we're winding down the month of June. We're winding down what's been a really eventful week or so, dating back to last Wednesday when the Federal Reserve shifted their message. But here's the thing. Just because the Federal Reserve is now talking about the fact that we're seeing recovery and that it might be time to talk about taper, and that there is a chance that at some point we actually might see a 25 or 50 basis point hike, maybe not 50 at once, but 25, and then maybe factoring another 25 in 2023, if not maybe 24. You get data like what we had today. Let's talk about these data points, because the path to the rate hikes is almost like a frog in lily pads, right? I mean, if you're thinking about how the Federal Reserve is going to monitor what's happening, well, jobs, inflation, growth. And one of the things that a lot of folks were concerned about is that inflation was overheating. Well, today we got the Federal Reserve's pet inflation number. And I call it the pet inflation number because, yes, I am totally bashing this thing. This is inflation, as I like to remind everybody. It might as well be the inflation on Mars, but nonetheless, that's the one that they look at. Now, when you think about, if you want a really, really good laugh later on, go Google the difference between the CPI, the Consumer Price Index, and this PCE, and this personal consumption expenditure number. And you will have a great big belly laugh when you look at what is excluded from the PCE, and the fact that the Federal Reserve uses this one. Well, it gives you a really good idea of why they keep harping on, well, we think inflation's fine. You'll look at this and understand. So this one's a really important one. Now, notice it does not indicate that we see this, needle moving increase in inflation. And what you'll see at 8:30 this morning, if you take a look at some intraday charts, and we'll do that right now, is that you'll notice that the market, the indices, S&P, NASDAQ, that's where my focus is right now, not Dow, not Russell. You'll notice that the S&P and NASDAQ liked it a lot, all right, moving higher. If we take a look at the structure of the daily time frame, if we take a look at the structure of the trend on the daily, really looking to find where the fatigue level is, looking for where, and I'm just going to push this over to the right here, looking for where the fatigue level is akin to standing on the railroad tracks as you can hear the whistle, right? You just don't want to do it. This is not an environment where, especially in certain indices, which are weighted by certain sectors, which are, of course, weighted with certain stocks. This is not an environment where I want to guess at where the market is going to start to taper tantrum or panic or think the market is too high, which, by the way, no such thing. Remember, trends are inherently imbalances of supply and demand. So a trend is going to look, especially when it goes parabolic, look, it's too high, but please take that out of your sort of vernacular and mindset. It's only going to cost you. And the few times that maybe, like a broken clock is right every now and then, twice a day, right? The few times that you are right are going to be so far outnumbered by the times that you've just simply stepped on the tracks. I don't want you guys on the tracks. All right, so that's where we are. That's what's happening so far this morning. And as always, love seeing everybody here at Charts and Coffee. Most awesome. So let's get to the questions. All right. So what do we have here? All right. We have, first up. Hey there. Good morning, James. Good morning. The Dow is above both the VWAPs. Yes, that's actually one of 6 things that I look for on the daily before I start my day trading. And it has finally emerged above it. So, by the way, I did a walkthrough of my charts, because look, have you guys ever, well, of course, I'm sure most of you have, but some of you might be pilots out there or have seen the inside of a, small propeller plane. I don't know how many gauges. I probably have to ask one of our pilots out there. How many gauges? I don't know, 6, 8, whatever it may be. I remember hopping on a flight to London not all that long ago. Big plane, lots of people. And I love to look at the cockpits because they're amazing. I think there were 17,000 gauges inside that cockpit. So, I think that those pilots knew what to do with those gauges. They knew how to monitor them. And there is a certain aspect of automation that the less that I have to manually recognize in real time, the less that I have to manually draw in real time. By the way, I do very little manually anymore. I let my process, I've let it become automated, and I let the process do the heavy lifting because, look, I'm flawed. I'm a human. I may have a bias to one direction or the other. My process doesn't. It just interprets what's there, right? So back to process. That's one of a handful of things we must do every morning. So, James, where the wheels fall off the wagon for me, and you're absolutely right in great eye, we're above the VWAP. So that's one thing that's working for me. What's not working for me here, my friend, remember, it's a relative performance conversation, is this. It's a neutral market. Yes, the previous trend was bullish, but if I'm looking for relative outperformance, yeah, I can at least buy the Dow. Intraday, I can look at sectors within the Dow that might be strong now. Yes, there is at least a door open to looking bullishly at the Dow. But I want to also remind everybody that, the Dow has to compete for our attention and our capital. Where our attention goes, our capital flows, right? And, I've got a double green on the ES as well as being above the VWAPs. I've got a double green on the NASDAQ as well as being above the VWAP. So yes, the Dow gets to join the club, but just be aware, exactly, just as you said, we've got that yellow neutral trade flag. Excellent. Following the process, James, love it. Is the path of least resistance for the Dow higher? It's probably going to have a lot to do with what's happening in the other heavily weighted sectors. Remember, tech and financials are your number 1 and 2. So if you want to whittle that down to the individual ETFs, it's XLF and XLK. So I think we've got to be a little bit more granular about what the Dow could do next based on, if we crack that Dow open and look at what's inside and understand that financials really should and must cooperate, and as should XLK Tech, then we can say, yeah, we feel a whole lot better about the bullishness in the Dow. Okay, so great stuff. The flags say we're in chop, but there is a path of least resistance. I just can't check as many boxes, right? Okay, next up, and thanks as always for the question. Next up is, what are my thoughts on Amazon? And hello from Germany. Oh, most excellent, Suzanne. Good morning or good afternoon. So Amazon is a narrative that would take us back to the XLY, right? And the XLY is a narrative that takes us back to the QQQ or the NQ futures, however you want to look at that. Oh, Cat's making a cameo. He's been kind of hamming it up for Charts and Coffee lately, hasn't he? Anyway, so QQQ, XLY, AMZN, right? So if I have Amazon moving higher, by the way, it did go double green on the 18th, and I can't recall if it was in one of the rooms or here in Charts and Coffee that I mentioned that there's a bit of a seasonal you can look at. Again, seasonal should not override the underlying market, but take a look right here. And so what we're talking about is this, except for last year, because someone reminded me last year we had an October Prime Day, but normally it's in June. And so we tend to see a run up into Prime Day and then a little bit of a pullback. So if we're seeing that pullback now, I think there's an opportunity, because we are double green on Amazon, to buy a pullback to get some kind of bullish strategy going. Now, whether or not that's simply a long call may not be realistic for a stock like Amazon, considering the cost. It could be a call vertical, or it could be, if we have a little bit more of a dramatic move to the downside, maybe a little bit more conservatively pushing the upper end of the daily price movement range, which is just a historical volatility measuring stick. At that point, we might even look at a something like a put credit spread or something like that. But it would all be, for me, a bullish strategy. So that's what I'm looking at on Amazon. I love the pullback because the structure syncs up with the seasonal. The structure is confirmed on my grab candles. The structure is confirmed with the VWAP. The structure is confirmed with the JT multi. We're above the 200. I mean, there's so many boxes I can check to say, yeah, we've finally really convincingly gone bullish. And then the pullback, A, which is the opportunity, and B, which seems to be in sync with the post-prime pullback. I like it. I like the rhythm of what we are seeing. All right, so next up is, do I have my eye on any currencies lately? Great question. I appreciate that, Mal. So if we are looking at currencies, we really need to start with the 6E. I'm very seldom going to talk about the dollar index. Talking about the dollar index just sort of reflects a diluted, mostly euro basket of currencies, which includes the krona. And no offense to the Swedish krona, but why do I care what the krona is doing? Remember, don't look at the dollar index. I get pretty salty when I talk about the dollar index, and I love currencies. But if you want to understand what the dollar is doing or what an individual currency is doing, yen, euro, you really need to look at it currency to currency, right? You don't want to look at it in terms of a basket. The dollar basket is a neat contract, perhaps, to trade, but as a reflection of what's happening in the dollars, it's awful. It's useless. And the reason I say that is because, again, you have a mostly euro weighted basket, six currencies in total within it. Euro is going to be your cleanest view of what the US dollar is doing. Now, the dollar's relationship to each currency is different. Now, why am I harping on the dollar? Because we've been in this reflation environment, and suddenly last Wednesday, and even slightly before last Wednesday, we started to see the dollar gain in strength. And it got very strong. It made a significant move, broke a lot of great trends. So disappointingly, I've got to wait to see what can reemerge as a strength story against the greenback. And I do believe the dollar will re-weaken, but not like it did before. So that's the dollar narrative. But say, what about the yen? Now, unfortunately, once we start talking about the yen, we really are talking about cross rates, and it starts to send us into the Forex world, because in the Forex world, we can mix and match any two currencies. And in the futures world, it's limited. And in the ETF, the currency share ETFs, it's very limited. So in my mind, with overall risk appetite coming back into stocks, I like the short yen play. And we could look at things like pound yen, Canadian dollar yen, maybe even Aussie yen for yen weakness, and strengthen those base currencies. So that's what's going on right now. I don't mind tapping the brakes on the currency narrative, Mal. I don't mind to tap the brakes because I want to see, who is ultimately going to reemerge as a really good contender to buy, as I want to short the US dollar, the Japanese yen, and maybe even the Swiss franc. All right. So thank you for the question. And by the way, a really good thing to do right now is just day trade these things, short-term time frame trade these things. You can get excellent intraday margin on these currency futures contracts. So they're actually really great to day trade as well. All right. So next up is, so that's kind of the currency conversation. So Al, I think that kind of, that would answer a bit of your question there as well, Al. So I'm not really specifically concerned about Russia's moving dollar from their wealth fund. Not really. And anyways, that would actually just feed the narrative that I was just explaining to Mal. So thank you, Al, for that follow-up. Can we take a look at FedEx? Can we take a look at, there we go. FedEx, Antonio, of course. Let's take a peek. Industrials name, not trending. Again, industrials and so industrials, sorry, this is transports, industrials, and the Dow really got swept out with that. Well, even before the comments on Wednesday from Powell, because those markets were already retreating as there was a lot of speculation that Powell was going to have to be just a tad more hawkish. And I'll tell you straight up, I thought that pullback in front of last Wednesday's Federal Reserve statement and presser, I thought that was probably enough. What was actually surprising was how much more weakness we saw in the corner of the reflation market that involved the indices and the heavily weighted sectors within that Dow corner. And so once my narrative is proven to be wrong, either macroeconomically or in this case, technically, my macroeconomic narrative is not wrong. It really hasn't changed, frankly, at all. I mean, longer term, maybe. Near term, no. But technically, obviously, it broke. So FedEx is one of those names where, yeah, I like the long, because even though we've been yellow and sideways on the JT multi since the 4th of June, the preceding trends were double green. So my bias is still very much to the upside. And I just really need to be patient about a setup. And I don't really love anything here that maybe after dividend date. So we had earnings, which I don't want to trade so close to earnings. And we've got that ex-dividend date. Maybe we see a pullback. And then if there's an oversold buy to be had, what I would say, and I know most of you that are in the Sector Secrets room would say, okay, Rob, let's crack open. Where is FedEx hanging out? What are the other stocks that are either like FedEx and are weighted within the same sector ETFs as FedEx? And do we have maybe some relative outperformance that we can take advantage of? So that's what I would say about FedEx. It's nice that it's moving higher, but I'm not, moving higher to me is not a setup. So I've got to find a setup. There's got to be the process that says, okay, this is doing that, and go down the list of what I need. And I just don't have that. And I think that goes back to this analogy of, there's a lot of pitches in baseball, but different batters like different pitches. And it's our job to know the pitch we like, not try to hit a pitch another trader likes, not to focus on pitches that are not within our personal zone, right? So it's just not in my zone. Yeah. So next up, love the channel. Try to find the correlation with gold and news resources that move gold. News, Miami, news, no, as a general rule for setups for me. Volatility and news, sure, will sync up. But thanks so much. As far as loving the channel, I appreciate that. And, if you guys leave a thumbs up before you go, smash that like button, and I appreciate it. So, Miami, here's what I would say about gold. The correlation, if you will, or what the catalyst for movement is, generally speaking, is real yields. I mean, that has always been why gold moves. It's not a safe haven. It behaves a lot like a currency, but real yields. And it's a inverse relationship to real yields, quite frankly. And so let me show you, because, charts are worth 1,000 words. Here is the Fed data, Federal Reserve of St. Louis data of the 10-year and gold. Look at that inverse relationship, because part of real yields, it's a very simple arithmetic, is the nominal yield of a bond minus the rate of inflation. So the nominal yield of a bond and gold should be an inverse relationship. And you can see that playing out mostly here. So that's what I'm going to look at. That's where your correlation, if you're looking for it, that's going to be the most influential, steady, and quite frankly, it's going to be the most accurate one over time. All right. Thanks as always for joining me for Charts and Coffee. So great to see you all. I'm going to head on over to the Sector Secrets room now. We have a bonus session this morning. We're going to take a look at some intraday charts, continue to rebuild our watch list. So I'll see some of you there in just a bit. And everybody else, thank you as always for being part of our morning show. And we'll be back on Monday. For those of you that I'm going to see tomorrow for our playbook day trading class, I'll see you guys 1 p.m. Eastern. You still can sign up for that. And that's at simpletrading.com/climb. Okay, CLIMB. All right, gang. Thanks as always. I'll see you on Monday or Saturday. Be good to each other.